Hi everybody, this is Bob Iacchino from Path Trading Partners. Welcome to another episode of our Technical Tool Series. These are technical indicators as applied to cryptocurrencies and traditional markets. These are indicators that have been used and people are currently using in traditional markets, stocks, commodities, FX, etc. But they are also applicable to cryptocurrencies when we use the charts to predict and sort of analyze cryptocurrencies. This is the Aroon Indicator. It's a little bit different and esoteric. It's not often mentioned or used by people. We're not going to make any predictions on price on this. We're just going to talk about how the Aroon is used and how you could potentially use it in your own analysis. So the Aroon Indicator was made popular by market technician Tushar Shandy in 1995. It is generally used to determine a direction in which a market may be headed and when it may be reversing. The name of the Aroon Indicator comes from the Sanskrit word Aroon, which means dawn's early light, trying to get a little early light on where the market is headed. Obviously, it's a very clever name. Let me go ahead and turn it over to Mike to go over some of the math behind the Aroon Indicator, and then I'll be back at the end. Mike, it's all yours.
Thank you very much, Bob. So, the Aroon Indicator. The indicator consists of two lines, Aroon up and Aroon down. The calculation for each indicator is the Aroon up is X minus days since an X day high divided by X times 100, where X is the input length. So if you're looking at a daily chart and it was set to 14, which most chart patterns default to, it would be 14 minus days since a 14-day high divided by 14 times 100, and the Aroon down would be the same except for days since the X day low. Now keep in mind also that this 14-day or 14 bar, if you're using it on an intraday chart, is a rolling window. So as you produce a new bar, it analyzes the last 14 or the last 25. Why I say 25? Traditionally, the indicator has had the input length set to 25, even though most charting platforms set it to 14 as a default. If you are going to play with this, I'd recommend setting it to a longer value like 25 to start with. So the calculation for each indicator then is, and if you're looking at a daily chart, Aroon up would be 25 minus days since the 25-day high divided by 25 times 100. Aroon down, 25 minus days since 25-day low divided by 25 times 100. If you're looking at intraday chart, it would be bars since instead of days. Or if you're looking at a weekly chart, it would be weeks. That's how you do that substitution. Here you can see just a simple spreadsheet set up with a calculation. If we've just gone and made a new 25-day high, the Aroon up will be 100. And then the longer it goes without making a new high, and remember, it's a rolling window, so it doesn't just decrease. It can spike up as old bars fall off and new ones come on. You can see it drops all the way down to 0. And based off a 25 period length, it essentially drops by 4 each time. If it was different than 25, that dropping by 4 would change. Aroon down, if you just made a new low, it goes to 100, and then the longer it takes without going to a new low, it will drop down. Keep in mind the rolling window. Again, interpretation of the Aroon Indicator. The basic rules for an interpretation of the Aroon Indicator fall into 3 major categories. You can have extreme readings of Aroon up or Aroon down, the crossovers between Aroon up and Aroon down indicators, and Aroon up and Aroon down moving in parallel. I'm going to cover the extreme and then turn it back over to Bob for the crossovers and the parallel cases. Extreme readings. These extreme readings can fall into 3 major categories. The first one is where one is near 100 and the other is near 0. Generally means a strong trending market in the direction of the indicator near 100. So if Aroon up is near 100 and Aroon down is closer to 0, it's going to indicate an uptrend opposite for a downtrend. If both indicators are at or near 0, generally means the market is in consolidation because it's not making new highs or lows, so it keeps consolidating and compressing. Or both indicators at or near 100, which is very rare, and it doesn't have to happen on the same bar, but it's within a couple bars of each other. That's range expansion. It means it's gone up and made new highs and also new lows. That is expanding both up and down. And again, that's a pretty rare case. You're not going to see that very often. So here we have showing an uptrend. You can see the green line is near or at 100. It jags up and down a little, but it remains up there. The red line is close to zero, and this is a strongly uptrending market. And then we see a little parallel fall, which Bob will go into. Here's a strongly downtrending market. Now the Aroon down, which is the red line, is close to the 100. The Aroon up, the green line is close to zero, and they remain at extremes. You have a nice downtrending market, and then a nice parallel fall. Keep this in mind for when Bob covers it. Here, they're both at zero for a bit of time, and you can see extreme consolidation. This is not making new highs or lows and actually keeps consolidating more and more and more until it does break out. Here's the crossover case, which Bob's going to cover also. And finally, here we have both at 100. This one bar here, both made a 25-period high and low. You can see easily it has not made a low in all the data on the chart. And this was more than 25 days since, or 25 bars. This is actually a weekly chart, so this would be 25 weeks since it made a high. And you can see they both spike up there, but you can see the range expansion on both ends before it breaks out and then starts moving in one direction. Let me turn it over to Bob to cover the crossover case.
Thank you, Mike. So Aroon Indicator crossovers. When the Aroon Indicator crosses over, it can be an indication that the market is beginning to trend. Don't take a crossover as a guarantee. It is just a sign that it could be starting. Again, indication, it's an indicator. Look for breakouts or breakdowns from consolidation to confirm trending behavior. So let's take a look at an example. Here you have some sideways price action. You can see a nice little base on this chart right here of Ethereum. And then you've got a crossover. The red crosses over the green right there, and you see a breakout in an ensuing downtrend. Again, this doesn't tell you that 100% certain the market is about to break out from consolidation into trend, but it is an indicator to where you can look at some of the other things we talked about in our videos. For example, moving up and retesting a breakout level, as you see right here, and to a certain degree over here. You've got the crossover, you've got a retest, you've got a down move. That's how you use an indicator to tell you that something might be happening, and then you look for other instances that might be telling you that it is happening. Aroon indicators in parallel. When the Aroon indicators are in parallel, it generally means the market is transitioning from trending to consolidation. It doesn't mean that the trend has to end. It just means that it may start consolidating. Again, an indicator is giving you an indication of something, not a guarantee. So here again is some price action. You've got to move up, and then you've got some sideways movement starting. You don't really know at this point. You've got the sideways movement starting, and then you go look at the Aroon indicator on the bottom, and you see they're traveling in perfect parallel. That is an indication that this consolidation may continue until you see a crossover along with more price action violation. This is an example of Aroon indicators in parallel showing you some extensive movement and consolidation in time. Aroon tips. A longer input length is generally preferred versus a shorter input length. That's almost always the case in charting, that a longer length, meaning more data, is better or more advantageous than shorter data. For example, using lengths of 20 to 25 is better than lengths less than 10. You've got more data, it's more reliable. Make sure you don't just blindly look at the indicator. Tie in what the indicator is showing with recent price action movement. For example, don't just rely on the crossovers to signal market direction. Make sure price action is not in consolidation first. It's broken out of consolidation. And when the lines are traveling in parallel, don't just assume the trend has to be ending. The market may just pause and consolidate before resuming the same trend that it looked like it might be breaking out of. So in conclusion, the Aroon technical indicator is good for helping identify potential trending markets, the direction of the trend, and when the trend could be pausing or reversing. Please use this indicator in conjunction with what the price action is showing you. Don't just rely on the indicator by itself to generate your trading decisions. Always rely on price action in conjunction with other tools. Any one thing is never going to give you high enough probabilities worthy of trading. So one more time, we are Path Trading Partners. We'd like it if you would follow us on Twitter at @path_trading, like us on Facebook, and visit us at pathtradingpartners.com. Check out all the free webinars that are on there. We get blog articles once or twice a week. There's all kinds of free stuff that applies to traditional markets that you can also use in cryptocurrencies. Also, listen to our podcast. We've got a cryptocurrency section on every podcast. It's called The Money Path. You can find it on our website, or you can type in the Money Path podcast into iTunes or Google Play. Again, check out our blog articles and check out all of our YouTube technical series, which are up and running. We've got, I believe it's 8 or 9 now at this point. And then we do daily cryptocurrency updates that are educational in nature. So check those out. Please hit like and subscribe if you like what we're doing. And again, thanks for watching.